Welcome to Pathfinders trainings. Guys, the coronavirus situation in India continues to remain bad, and so does it all over the world. We are more than a lakh now. The stock markets all over the world, after some rally, have started coming down. There is tension between USA and China, and the whole world seems to be under stress. Today, we had a repo rate cut by the governor, hoping to revive the markets, but that did not happen. Even today, the market has gone down. So let's start by looking at the market and the levels it can move up to. So if you see here, this is the level, and this was the crash of 2008. And if I see in this one here, at that time, there was a 61% retracement, and now slowly, after this continuation, it is likely to move down. And the moment it breaks this level, this can be very much a target of 7,300 rupees for this market. This is a macro picture. It will not happen tomorrow. It will take months, maybe by in the next 3-4 months, we can see this. If I go to the daily chart and I want to see here how many stocks are bullish, how many stocks are bearish, and I'm adding into this, a 200-day moving average. And if I see this, when the price is above the 200-day, it is considered bullish. When it is below, it is considered very bearish. If you look at our market Nifty, we see it is very much into a bearish zone. And we can also do the filtering for it. Let's see overall, out of all the stocks that are here, how many are bullish and how many are bearish. So let me do a scan. And you see 27, May 20, bullish, bearish. Let me do the scan, and I'm doing very simple. Last traded price is greater than the 200-day moving average. Add to grid, and let me find out how many stocks are into this category. And I see there are 237 stocks which are bullish and which are above the 200-day moving average. So that is 230. Now, against this, now let's edit it and see in how many stocks the price is less than 200-day moving average. And we see in this, there are 1,352. So this is what I see. So out of the total stocks, 237 are bullish and 1,352 are bearish. So the bearish, so that is total 1589. 1352 divided by 1589. If you see here, 85%, that is a big number. 85% of the stocks are bearish. Even when the Nifty movements goes a little up, it is mostly a Reliance or HDFC or a few large cap stocks that drag it up. But overall, underlying into the market is a lot of bearishness into the market. So let's look at the further levels this market can go till. We have been discussing this flag pattern for a long time. And if you see here, look at this market, and this was the trend of this market, which it has comfortably broken. And if you see, this was a flag that was formed, and market comfortably broke this level. See, very comfortably broke the level. Here at this point here, this is where it was broken, tried to move up, but price was rejected. And today we had a 40 basis point cut by RBI governor. In a normal case, Nifty would have shot up 200 points. But now if you see, we are just seeing a pattern called evening star. So evening star that we are seeing is getting confirmed here, which means from here you might see more downward levels of the market. Let's look at those possible levels where the market can go. This is a time where you should protect your portfolio, you should hedge it properly. My portfolios are hedged with a combination of futures and options. See, here if we look at, this is a level where the market is trying to hold the 38% Fibonacci level, and this level being broken, the next levels are 8,700 and 8,400. Now that those are the levels, and in case this level is broken, market will move further down. You can see further downside to the previous lows. Uh, there is no business. Offices are closed. Even when airlines are opening, their income would be very less because so much expense is there, social distancing and other things. They cannot generate their regular profits. So we have to look at everything in that perspective. The PE of Nifty is about 20, which is very expensive. Consider our GDP growth won't be more than 1 to 2%. Normally, a good rule of thumb is whatever is the GDP growth level, three times that the normally PE is able to sustain. Earlier, our GDP growth used to be 8%, so a 24 PE was okay in a growing economy. But now with the GDP growth, maybe 1 to 2%, even PE of about 15 to 20 would be a very expensive PE. So bearishness into the market, coming months will give you good opportunities to build your portfolios. But for that, you need to learn how to do it. The cornerstone in any kind of trading is that you understand what is to be done here. There is money in the downward direction, provided you know how to work on it. I've not been doing much today since it was the governor's report. I have booked a small profit of 1,073 rupees, and I've hedged my portfolios so that in case the market crashes down, my portfolio value would be protected. Learn to hedge your portfolios, learn futures and options, because you should know how to make money in all three directions of the market. And if you see, market is about to close now. And if I look at the top 10 stocks, how they are performing, Bharti has done pretty well. It has more or less won the battle over Jio. Mukesh Ambani has started selling his Jio stake. His father never sold anything. He has started selling, which means somewhere inside there is something that you and me don't know about. HDFC payers, if we see, that's weak. HDFC is much, much weaker than the market. It has started moving down, and real estate in distress. The stock was already expensive. It is moving down. Then we have HDFC Bank, which is also correcting. FMCG normally is a strong sector in a bearish market, but Hindustan Lever has given all its gains that it had in March, April, and now it is also going down. ICICI Bank is moving down. The volatility of the market, if we are seeing, is moving down. This is Infosys, and if you are looking at Infosys, Infosys has been a strong stock, and on the way down, it left gaps right from here. So it might go up to fill these gaps. Looks like there's somebody buying this stock. ITC, another FMCG company, is doing better than Hindustan Lever. Banks are weak, see more weakness in Kotak Bank, and the stock that is holding the market is Reliance with the rights issue going on. So I think the price would be managed well till the rights issue is there, but it is again a very expensive stock, and the stake in Geo is being sold to outsiders to raise capital. There is debt on the company, so if you are looking for a good exit, this might be a great time to get out of Reliance. TCS, another IT company, which is doing pretty well into this bearish market. So this is how the overall market is doing. Bank Nifty has been much, much weaker than Nifty. If we compare the two, let's compare Nifty and Bank Nifty. And if you see here, the banks are weak, much, much weaker. Now, if I'm looking at Nifty on the left side and right side is Bank Nifty, see here, look at the trend. This is how Nifty has been moving. This is the trend of the Nifty. And here, if you see, Bank Nifty is much, much weaker. Kindly don't buy any bank. Don't think they are cheap. They are still very expensive and they will continue to go down. So, learn properly. You want to learn stock market properly, go to pathfinderstrainings.com. That's my company, and I'm a coach. I teach people how to become traders and investors, but you cannot just take up the course. You need to give an interview. So anybody who wants to train under me, you needs to give an interview, and there is 1,000 rupees of advance you need to pay. Give the interview, and if you are selected, you become part of the course. So all the best, guys, and take care. We are in a tough market, and the bearishness in the market is continuing and increasing. Thank you very much, and see you into one more session.